Welcome to the Stock Market Daily News podcast for Tuesday, February 25th, 2026. Yesterday's session delivered plenty of action, so let's recap the numbers. The S&P 500 closed down 1.2%, the Dow Jones slid 1%, and the Nasdaq tumbled a sharp 1.8% on heavy tech selling. Worries over artificial intelligence, a sell-off across software stocks, and continued Bitcoin weakness rattled investor confidence. Today, we're unpacking a dramatic viral recession warning, Coinbase's bold broker move, Bitcoin's latest plunge, and why Walmart's steady dividend boost still matters. Let's dive in. First up, software and tech stocks were hammered after a viral research note from Citrini Research warned that artificial intelligence could trigger a recession and double-digit unemployment by 2028. The report sent market jitters through the sector, with names like Salesforce and ServiceNow losing over 3% in Monday's trade. Critics, from economists to fund managers, called the scenario a worst-case thought experiment, arguing markets may be overreacting. The takeaway? Market fear is high, but many experts say policy responses and gradual job shifts could temper the real impact of AI disruption. Meanwhile, Coinbase made waves by launching zero-commission trading for U.S. stocks and ETFs, stepping directly into Robinhood's territory. Now, Coinbase users can trade stocks as easily as crypto, 24 hours a day, 5 days a week, with no fees and fractional shares starting at $1. Partnering with Yahoo Finance and Apex Fintech, Coinbase aims to become an everything exchange. Shares of Coinbase, ticker CON, ended Monday at $113, holding fairly steady after a tough year-to-date drop of around 35%. Investors should watch for how this diversification could reposition Coinbase during crypto downturns. Turning to crypto, Bitcoin extended its slide overnight, dropping below $63,000, its lowest level in almost 3 weeks. The nearly 7% weekly drop was fueled by renewed tariff concerns as President Trump announced a temporary hike to 15% on imported goods. Technical analysts warn more pain could be ahead, as historic patterns suggest Bitcoin rarely finds a bottom until deeper capitulation takes hold. Key support is around 60,000. If that level fails, a move into the 50,000 range is possible. For now, crypto and equity investors alike are bracing for more volatility. Finally, on the blue-chip front, Walmart keeps showing its pedigree as a dividend king. The retail giant raised its annual dividend by 5% to 99 cents per share for fiscal year 2027, the 53rd consecutive yearly hike. Despite a 13% gain so far this year, Walmart sits at $130.50, carrying a premium valuation. Strong e-commerce growth, AI-powered shopping, and a growing services business support the move, but analysts say the real story is long-term stability, not outsized yield. To close, major indexes finished deep in the red, S&P 500 down 1.2%, Dow Jones off by 1%, and the Nasdaq leading the slide at 1.8% lower. Uncertainty over AI's impact, crypto weakness, and big broker strategy shifts drove the session. Looking ahead, keep an eye on upcoming earnings from key retailers and the next round of inflation data later this week. If you found today's insights useful, make sure to subscribe and follow us for your daily stock market brief. Thanks for tuning in to the Stock Market Daily News podcast. See you tomorrow.